Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today on finding the best trade setup, the best instrument in the session that you're trading. My best trade setups coming from the playbook are day 3 parabolic trend or reversal trades. Wednesday, Friday. That's the Monday to Wednesday, Wednesday to Friday, day 1, day 2, day 3 templates. Then there are also 3-day setups which can offer parabolic trend trades or parabolic reversal trades, which can build on any 3 days. And then we can have 3 days of breakout traders in the markets, trend trades or reversal trades. Now some of these are going to be 5-star all-in measured move opportunities of a range expansion from the daily template. Other trades are going to be session trades. They're going to be high of day to low of day, closing price to low of day, closing price to high of day, whatever that may be. Timings of the weekly templates in terms of the month itself. We're at the last day of a trading month today, and a new month is about to begin. That's a new timing cycle, as I've explained in previous videos. Go and look at your daily charts and look at how closing price behaves at the end of a month. We can get major reversals that begin at the beginning of a month. We can get continuations that can begin at the beginning of the month. Signal days are inside days, first red days, first green days, day 0 type of setups that can occur over 3 days, 2 days for a day 3 opportunity, or a day itself. Now, one of the criteria that I always talk about is no major red news in the session, meaning that if there is news scheduled in the session that you're trading, I wait until after the news is released. It can be the first minute after the news is released. We talk about the 4 types of news candles that can be released in the first minute that tie in with a longer time frame opportunity. These trades are driven by other time frame traders. So these are the opportunities that I'm looking for in my trading window. I trade 90% of my trades are in the US session. Front side, back side. We're going to look at the calendar this week. There's quite a bit of major red news in the US session. And that is a week that I will look at opportunities that will show up in the Asian session, day 1, day 2, day 3, in the Aussie, New Zealand yen crosses. They're major pairs. And we can see the same occur in the London session for London session traders on Euro, Pound, Swiss crosses. And we'll look at some examples of that today. And then, of course, trading the US session, if I have major red news and it's prior to the New York Open, I will trade as per normal. If it is after the New York Open, as we had today, 10 a.m., if I am in the market before that at the New York Open, I will be out of the market before the news is released. That gives me, in most cases, that full hour. It's 30 minutes to the next hour, but that is a full hour of movement that can potentially, as we saw this morning, move 75, almost 100 pips with zero stress to the end of the hour before the next major news release. So to repeat that, I am not in the market before the news, right before the news, but I may be in the market after the news, especially if it coincides with a larger time frame template setup that fits the criteria of one of these 3 setup opportunities that I hunt for in the markets out of the playbook. Just to review this, the basic model for trade entries is in here using our 5-minute charts. This is to simplify things, reduce the subjectivity, and to focus on the highest probability opportunities with removing analysis paralysis for the majority of traders. When you get more consistent and skilled with that, of course, you can go down to the smaller time frame, the 1 minute, because they all will align with the levels. The levels, again, being our high of day, low of day, and closing price levels. We have the 3-day setups, high of week and low of week opportunities. We have 3 session setups that can occur over Asia, London, New York. Now, if you're trading in London, it may occur over US, Asia, London, into London. Or it may be London, US, Asia into the London Open. If you're trading Asia, it could be London, US, into the Asian session. We can get a dump and pump into the open of the Asian session on a day 3 for a continuation parabolic move, or a day 2 trend continuation move after a first red day, first green day. And then, of course, we have our day 3 longs and day 3 shorts looking for reversals, and sometimes they can be trend trade opportunities, depending on how that market is set up, whether or not we have broken any weekly boundaries, going back and understanding the templates and the hourly charts, the dump and pump, the pump and dump, basic Monday to Friday templates. That's the basic model. And that's why we'll get signal days, first red day, first green day. We can get them they'll be towards the end of the week into the new week, and vice versa. Now, inside days, we talk about Monday being the opening range of the week. And initial balance Monday, Tuesday, the same behavior happens Wednesday to Friday. Wednesday is our midpoint range of the week. Friday is our closing range of the week. We'll look at some examples of that today from the indexes. Heading into our Monday, Tuesday, we have a major lineup of red news this week. This is our week as we end the month of October. Halloween, happy Halloween, by the way. But we have quite a bit of major red news. We had some in the Euro session yesterday. We had major red news. Canadian dollar, and then we had China later in the day into the early part of Monday evening, North American time. Bank of Japan, we saw some vertical moves. Sometimes this will not be released at any particular time in general. Today it was released at that time. They will have meetings and release it whenever they choose to. We saw some volatility and spiking. When I see that behavior with the Japanese Bank of Japan press conference, etc., I will typically avoid that market. We saw some huge moves on yen crosses today, but we also saw some big spikes. And chasing those moves can be risky. And I'm not looking to chase movement. I'm looking to identify when I have a 90-10 opportunity where I can manage my risk. There's no future scheduled news events on the calendar, and I can trade as per normal. But we have a huge lineup of news. U.S. session today, we had a 10 a.m. CB consumer confidence. We saw some great moves occur in the U.S. window today. Today is the last day of the trading month. I repeat, go back and look at your daily charts. Look at the changes that can occur at the end of a month, beginning of a new month. Heading into Wednesday, the first trading day of the month. Okay, we have closing price now from on any instrument. So I get this question a lot. Does this work on this? Does this work on that? If it has a high, a low, and a closing price, it's the same thing. Different instrument. If it has traders trading that market, everything is the same. You need to know all the nuances, the behaviors. If you're trading major blue chip shares or shorting penny stocks, well, obviously you need to know what you're doing. You need to know all the other nuances of those instruments. But indexes, oil, gold, currencies, they reflect all of these behaviors. So we have 10 a.m., 8:15 ADP non-farm employment on Wednesday tonight, heading into tomorrow morning, New York time, Wednesday morning. Then we have 10 a.m. news again. We have the Fed tomorrow. We have a non-farm payrolls Friday. We have CPI for the Swiss franc. We have Bank of England on Thursday. We have unemployment claims Thursday morning, New York time. We have Canadian unemployment and non-farm payrolls on Friday. ISM services PMI 10 a.m. So a major week of major red news. So in this particular situation, I will look for an Asian session opportunity, which is in the evening for me in North America. But on those sessions, I'm not staying up to trade England, the London session, but we could see opportunities 1 or 2 days out of this week where we get a parabolic move, front side, back side, or we will see that potentially maybe in Asia, maybe even Friday morning prior to, Thursday evening my time, but Friday morning Asia time prior to a non-farm payrolls Friday and an ISM services PMI. So the calendar can affect this, but this is an abnormal week. This is the first week of the month, and we will typically see a huge amount of major red news in that first week to 10 days of a new month. As I mentioned in previous videos, I have compiled a new playlist, which I believe, as it's titled, gives you everything you need to know in this playlist. Levels, timings, behavior of price, 3-day setups, Monday to Wednesday, Wednesday to Friday setups, breakout trader market setups, day zero setups, levels, the timing, the behaviors, all the things that you need to understand to be able to trade effectively. Now, I need to just reemphasize, this is how I trade, and I am not buying and holding or selling and holding. I am looking for scalable opportunities that I can trade in the session that I'm trading and be able to scale them up in size. They're sizable opportunities. They're driven by other time frame traders. You'll notice that I use hourly templates often, which means I'm probably in the trade a minimum of 30 to 45 minutes in most cases. And then a larger 5-star weekly template opportunity, I can be in that trade for maybe 3 hours or more if it's an all-in opportunity that may close at the extreme of the day. These are scalable and opportunities where they can be significantly compounded on my trading account. Japanese yen, Bank of Japan, I wouldn't even bother. Obviously, there was a lot of huge movement, a continuation trade in the U.S. session, but we had 2 bouts of major red news. I wouldn't bother looking at this market when I have Bank of Japan and intervention in that market. That's my choice, and I'm not talking, remember, my focus isn't trading movement. I'm looking for where the odds are skewed in my favor, not trying to catch a move, jump in and grab pips, and get handles and all these other things that people talk about. I'm actually looking for setups, very specific setups that we just talked about. But we had a day 1, day 2, day 3 blow off yesterday that we mentioned in yesterday's video. We saw that reversal begin early in the day for Asia off of closing price level, trade up to the breakout level, and then the continuation at the end of the Asian window into the Europe-London window. It traded up to the previous high of day at the open of London before pinning down, an example of where market traders get dragged up, stop hunt down, and then the continuation move, and we have a breakout of the high of the month, the high of the day. Now, on a day 3 type of opportunity, a reversal trade like this. So, traders have asked, I'll just mark these levels off, 3 levels, high of day. These are the only levels that I'm looking for opportunities from. So when I have an instrument, I need a level to trade off of. Closing price and the low of day. When I have a reversal, this is a day 3, 3 days, day 1, day 2, day 3, high of week. Break of the previous day's low confirms this as a day 1, a high of the week, failed breakout. And then our day 3 blow off. Day 3 can typically blow off in the direction of the trend. If the reversal occurs on the next day, my next target will be a full range, at least one full range expansion of that daily high low on a day 3. So traders ask me, well, how do you do that? This is just my Fibonacci tool. I have just changed the numbers to 100, 200, 300, 400, and I have a 50% measurement which I will use. And often that 50% level will become significant. You'll notice that coincides with the previous low of the week level. So if I'm going to be taking a trade and I'm going in a long direction, that 50% level is significant if I have no other level present. Now this was a low of the week level. So that level was significant. Why is that? So traders have asked often about closing price of the week. We have closing price of the week. We have a low of the week. These are all significant levels. Why is that? Because the beginning of the week, what have they done? They have triggered breakout traders into the market. People can call it a liquidity sweep, stop hunt, whatever you want to call it. Doesn't matter. They've gone down first before going up. And when they break the high of the day, this is now confirmed as a day 1 failed breakout low of the week. We are in day 2, which means tomorrow, Wednesday, even though we have Fed and everything else on the schedule, is Free Cash Wednesday in a Monday to Wednesday template. Whether or not we'll get a best trade setup, we will know. Now you'll notice I have yellow on the screen. That's the New York session for me, the New York Open. So I'm not trading any of the other sessions. We'll look at some examples of Asia and London today. But understanding that day 1, day 2, day 3, scalable, reproducible. This is a riskier situation because current circumstances, the Bank of Japan has intervened as we saw large wicks. So I will typically avoid this until things stabilize and get back to normal. We're looking at the Swiss franc 1 hour chart, and I want to point something out. several traders, not several, but a few traders inquired today saying that it was a first red day on Monday. Now, we've talked about this before. If you get a first red day on a Monday, and this is often a trap, I want to reemphasize, a down closing day does not mean that it is a first red day setup. I want you to also notice, if we go back to the beginning of the month, October 1st up here, the high of the month, we have the high of our month, and then we went week 2, went lower. We have our lower high of the week. And then we had week 3 that went even lower. So we broke the low of the previous week. We went lower on week 2 and then week 3. Before, as we just spoke about, triggering false break, triggering new shorts into the market at the low of the week, heading into our new week. And you'll notice again, Monday, Tuesday, opening range, initial balance. One of those extremes will tend to hold a large percentage of time. And that week closed. Closing price of the week. Remember the importance, closing price, Paul Tudor Jones made that a first green week heading into the end of the month. Now I also want you to notice they popped the top of the previous week before dumping down into Friday's closing price, a little bit lower, gives a first red day impression, but you'll notice, we can zoom in here, you'll notice their dumping made a higher high. We're still front side. We have a market that's trending. Higher high, dumping down into the closing price level and going sideways. A market that coils sideways is potentially brewing for a bigger move. We had major red news as we head into our U.S. session. So we are on top of closing price when that major red news is released. So you'll see this was a full range expansion of that lower low of the month rectangle, opening range, initial balance, day 1, day 2, day 3. And then we have the same thing. Friday closed as a breakout day. It continued higher on Monday. New high, confirming Friday as day 1. Day 1, day 2, day 3. This is a day 0 setup. Day 1, day 2, day 3. Peak formation low, peak formation high. Consolidation on top of closing price for a second full range expansion from that bottom rectangle on the Swiss 1-hour chart. US CAD 1 hour, we'll zoom in here again. Friday, the closing range of the week. Peak formation low, breaks out. That is the high of our week and our month. Dumps down. It dumps down underneath of Friday's closing price, but dumps down on top of Monday's closing price for the day 3 continuation on a Tuesday. Day 1, day 2, day 3. This is an inside day. So we have our high of the week. It dumps down on the Monday. Similar to our templates in the session itself, if it dumps down at the beginning of a week, in some cases we can think pump if we have a setup at the levels. Now, when we come to our US window, we have our major red news release. We have already come underneath of closing price. Thesis is closing price to high of day, high of week, which traders had the opportunity to position themselves in the markets and actually probably be out at the high of day before major red news. So again, just following in line Friday, Monday, Tuesday. Friday is the closing range of the week. Inside day on Monday. Market trades down underneath of closing price before layering on top, get a first bar trade opportunity in our major red news release at 8:30. This is US CAD. We had CAD release and US news also. No wicks. This is one of the 4 bar criteria for a first minute trade entry. This is actually a 5-minute candle, but after our first bar, no wicks on either side, a very low risk range expansion, asymmetrical risk reward, following through on a day 3 opportunity on the Canadian dollar. So Euro USD, we talked about this. We had first green day on our Friday's close. That gave a low of the day opportunity in the London window on Monday. Day 1, day 2, higher highs, the dump and pump on a day 3, which continued. Now we have 3 days of breakout traders in the market. So we had a day 3 opportunity on Monday, but then we also had day 1 of breakout traders in the market. Then we had day 2 of Breakout Traders in the market. And today was a day 3 parabolic move of Breakout Traders in the markets that blew off at the beginning of London underneath of closing price and coming off of the high of day level. Breakout pullback continuation. We'll look at that in a moment. I just want to point out the levels. We had closing price up top, the highest closing price for October up top, where the market traded up to just prior to our US session. London window hit that level inside bar, double inside bar, which is a major reversal pattern, which we talk about in the playbook. We talk about different double inside day examples. This is on page 74 in the playbook. The double inside days, rare, can be an indication of a potentially explosive move. So just pointing out that even though we had a day 3 parabolic on Monday, we still now have day 1, day 2, and now potentially day 3 breakout traders in the markets on Tuesday. When we go back to our universal EMA, we can see the beginning of the Europe London window. We came right off the previous day's high of day in the open of the session to continue a very strong parabolic move up to closing price. 5-minute chart for the euro. Day 3 breakout traders in the market. We have our half Batman pattern. Again, the trap volume up top. First bar opportunity. This is a 5-minute chart. So on the currencies, I will often use the 5-minute as opposed to the 1-minute because occasionally we can get in on the 1 minute, but it's not always necessary. This is a 1-bar stop. Again, stop loss should not reverse on a move that's got trap volume. And we have the all session fade throughout the rest of the window. We had major red news again at 10 a.m. New York Open continued lower. They pumped it back up into closing price level, so we were underneath. They pumped it up to continue down another almost 40 pips down from the high of the day. Day 3 breakout traders in the markets. And just shortly, we can look at several other pairs, but I'm going to encourage traders to go and do their homework on a week with lots of major red news. I will look at oil. We'll look at that before we finish. But I will also look at cross-rate pairs, Euro-CAD, Pound-CAD, Euro-Oz, Pound-Oz. And again, just looking for one opportunity in that week. There are opportunities every day if you have a basket of instruments that reflect best trade setups. I am looking for that opportunity to be in the market in an easy, zero stress, parabolic move, or a move that's going unidirectional for the next hour, the next 2-3 hours, whatever that may be, 50, 75, 100 pips with no stress, and a 90-10 opportunity. If you go back and test these, you'll understand that everything in the playbook is there to protect me from getting into garbage 50-50 markets, trading, garbage levels, timings, behavior of price. Sit on your hands. Like Bill Lipschutz says, learn to sit on your hands. Know when you have an edge in the market. If you don't know that and you're trying to trade movement and price action, great. There's going to be the day that you get chopped up on a day 2 or you get going to tilt, you revenge trade because you don't have a process. You don't understand what your edge is. You're trying to actually trade the movement as opposed to trading a 90-10 best trade setup. Little 1-minute bars zigzagging back and forth and breaks and structure and all this stuff when they're not even at levels. These levels protect me. They allow me to identify a 90-10 opportunity at the timing window, then understanding the day count, the template, and the major red news. Is it going to be a market that's going to be I've mentioned this several times, on a Fed and non-farm payrolls week, we can often see a 5-day template, 4 days, where maybe they make a high, make a low, and it could be Tuesday, Wednesday, Thursday, hold it up there for a day and move it on Friday. Not a normal template on one instrument, but there are template opportunities over the course of the week on several instruments. So we had a question that I did receive, great question. They said, how was it yesterday, a day 3 on a Monday? Well, we had breakout traders on Wednesday, our midpoint range of the week, that opened on a gap on Thursday. Friday was an inside day. I repeat, Friday is the closing range of the week. Friday's an inside day, so then Thursday becomes the closing range of the week. The closing price of Thursday is our lowest close. Okay, so study the closing ranges of the week. I repeat, study the closing ranges of the week because that will help you identify opportunities heading into Monday, Tuesday. As I talk about, 3-day setups are different than a Monday, Tuesday, Wednesday template. That's a separate opportunity. So we had Thursday's high and low in the U.S. session formed our range, our U.S. session range. So you've heard me repeat the phrase Fugazi. I'll just show this. I consider Asia and London garbage to me because I don't trade those for the U.S. indexes. So agree, disagree, completely irrelevant to me. It means nothing to me at all. Levels, timings, behavior of price, best trade setups. That's what I'm trading. So when I look at this, it's an inside day, no opportunity. I know you could trade the high of the day and all that stuff, but I'm looking at another index if it's at a level. We had an opportunity yesterday, a fantastic opportunity, high of the day, high of the week, trading back up to our closing price from Wednesday and the high of the day level from Thursday, which gave traders a fantastic reversal trade on Monday, which was triggering breakout traders on the inside day. Today, we saw something very similar. We saw a market that traded between the high and low of the New York session, but heading into our New York Open, 9:30 New York time, we were sitting right at closing price level. Now, I know that I just said that I consider this Fugazi because it's prior to our New York Open, but we're at the high of the New York range. We had established a high of the day in that first hour and broke down. Now, if I go back to a 15-minute chart, you'll see that this was a death candle. This candle right here, this 15-minute reversal, this is prior to our New York Open, by the way, large death candle, which engulfed that whole upper area of volume. So if traders were trying to trade this first hour and go long, again, we had the death candle, which is an opportunity for me now looking at closing price level. I'll just zoom in here a bit. Closing price level as my level to attack the low of the day. Now, you will also see that I put a level to take some off underneath of this pin hammer where the second leg of this pump starts. So we get our little engulfment at the low of the day. This pin hammer is a potential level where this market can fail. So after my death candle, I am underneath my EMA and underneath that upper structure of trapped volume. I will now go to my 1-minute chart. Remember, I'm looking for an opportunity at the levels. Closing price is my level. My target is the low of the day. We get our little lower low. It breaks down below our death candle. Lower low on the inside is the setup for the pump and dump. And as this market pumped up and engulfed right on the first minute, I was pounding the key because this market should scream away. And I consider anything down to this level, basically underneath of this little lifting area, as acceptable for me to be adding positions into this market. If this reverses at all, I will cut the trade because this market should now accelerate. This is a parabolic squeeze for a vertical move, and just paying attention to timings, major red news at 10 a.m. This market traded through the low of the day, fully exited out of this trade, and we also, if we just back this up to our 5-minute chart, we've cleaned that out. We got a nice little pin there. Going back to our 1 minute, you'll notice one push, two push, and a third push after the news into our low of the day. The engulfment for the explosive reversal back in the opposite direction. Now, again, in a situation like this, I would be looking at all three indexes to see if we were at any other levels. The DJ30 was at the low of the day, not at a level, but at the low of the day on the chart. So everything is fractal. This can go out to larger time frames. We are at the beginning of a new month. There's other videos on that. If you Google them on the channel, you'll find that there are other videos on the timing cycles of a new month. Day 3 parabolic trend trade reversal trades Wednesday and Friday. Those are free cash Wednesday, free cash Friday opportunities. Then we have 3-day setups, parabolic trend or reversal trades, which we had example of that today. There's session trades. 3 days of breakout traders in the markets, and we saw some huge moves on gold, euro, I believe a few of the other currency pairs. Japanese yen, obviously, intervention. I choose to avoid situations like that where there can be manipulation, a little bit more volatility or wicks in the markets, a little bit riskier to trade with size when conditions return to normal, which they will. Same opportunity potentially could have yielded traders a significant, huge parabolic blow-off on a day 3 reversal opportunity. So these trades occur repeatedly. Rinse and repeat. Master your setups. Step back. Understand how the templates work. Other time frame traders driving those moves. They show up repeatedly. I could care less what anybody else thinks, says, or does, because these setups will significantly compound your account if you understand and master them. Keep it simple, traders. Rinse and repeat. Scale it up in size. Master your emotions. Master the setups. Master execution of them in live time. Master walking away so that you don't give money back and start trading movement because you're overconfident or because you're such a great trader. Learn to lock in the money and come back the next day and do it again. Work 1-2 hours a day. Have a great day, traders. Awesome start to the week. Let's keep it going, and may the markets go with you.